Okay, so again for withholding tax, you should have a table, all right, with all the sources of income and the definition section, what is the whole withholding tax rate, right, and then derivation, yeah, derivation of each source of income. And then for all these, all right, in terms of non-compliance with withholding tax, you should know what's the implication. Yeah, what happens if you do not comply? Tell me. Anyone? What if you do not comply with the withholding tax? Anyone? Ha. Tiba-tiba kelas senyap.
Whole amount is not allowable.
And also in the family. You have to treat them, your brothers, the sisters, and family. Right?
Do we have any someone else talking? Is it mine? Send one. Are you okay, send one? Alright, if you do not comply, there are two. One is the non-compliance. Non-compliance, maknanya apa the 10% penalty of the withholding tax or the amount due. Alright, so that is 10%. But the other one is the incorrect return. So what is the implication of incorrect returns? Alright, so you have to really understand these two non-compliance issue, right? So what is the implication? And remember that if you do not comply, the whole amount is non-deductible expense. The whole amount, for example, you're talking about royalty expense, the whole royalty expense is not deductible. But if before submission of your income tax returns, for example, your year end is 31st of December, and then what you do is that what do you do? Tak ingat dah I. If you were to pay the withholding tax or the amount due plus the penalty before submission of your income tax returns, which is by 31st of July, then the whole amount royalty now becomes deductible. But the penalty amount still not deductible, yeah? So, for example, you pay out the royalty of 100,000, but you did not withhold tax, or in the case of you did not pay the withholding tax within the due time, for example, 1 month. All right, so you pay the penalty plus the withholding tax before submission of your return form C. So the whole amount royalty now becomes deductible expense. But if you fail, then the whole amount is non-deductible. All right. So when it's non-deductible, but it happened that you claim that expense, all right. So then it becomes a problem, because when the expense should not be the deductible expense, in the case of withholding tax, all right, non-compliance. So, but you claim the expense, you claim the royalty expense to be deductible expense, then the return submitted is an incorrect return. So the incorrect returns penalty is 100% of the tax under charge. So how much is the tax under charge? Again, it depends. For example, in the case of royalty, so you just now add back 100,000, right? So 100,000 is actually the amount which is non-deductible, but you have claimed that. So if you have done that correctly, all right, you have to add back 100,000. So that 100,000 means that tax at 24%, that will be 24,000, isn't it? 100,000, 24,000, 24% of that. So the withholding tax here is actually amount due from the withholding tax is 10%. Okay. The penalty is the 100% of the tax under charge. So if 100,000 times 24% is 24,000 tax under charge, all right, your penalty is also 24,000. I believe in the textbook, the example is 10,000. So that's why it becomes 2,400. Yeah. So 2,400 plus, that is the penalty, 100%. And remember that you have not paid the withholding tax, 10% of the royalty plus penalty, 10% of the withholding due, or the withholding amount of the due. All right. So all this add together becomes amount due to the government. Yeah. So make sure that you can actually explain that, all right? You understand the concept of non-compliance to the withholding tax. Banyaknya terkarung kat belakang bilik ni. Ni bilik anak nombor 2. Lelaki. Alright, Next is, all right. So I assume that we have covered your withholding tax. Definitely there will be question in your final exam on withholding tax. And if you look into the past year's question, it could, most likely it's going to be theoretical. If computation is just simple calculation whereby how much is the withholding tax. All right, means that you must know how much is the gross amount, how much is the rate of the withholding tax. And you must also know if you're given information, all right, which is the amount which is subject to withholding tax, all right. For example, if the question gives that scenario whereby you purchase a machine, all right, 100,000, and then you pay for the installation, all right, you pay for the installation to the non-resident person. So the amount which is subject to withholding tax is the installation cost, not the cost of the machine. Yeah, the cost of the machine is not subject to withholding tax, but the services in installing the machine, all right, is subject to withholding tax. So your withholding tax is certain percentage of that installation cost. Yeah, so be careful which one is actually subject to the scope of your withholding tax. All right. I think that's all for the withholding tax. We go to the next topic, which is double tax agreement. All right. We are supposed to cover this topic last week, but because I overslept, all right. So I should have actually given you my recorded video on DTA. All right. Actually, I already have my recorded video. All right. Maybe you can have a look at this. All right, but I will not do it now lah. All right. So we already have this. If you want to look at just a bit of this, let's see whether we can see. With regard to when we talk about when a Malaysian company, right, business in Malaysia, doing business. So it takes about 1 hour. All right, I already put the link. Other topic because it's a cross. I already put the link in the Google Classroom. So I think that rather than I'm repeating the same topic, double tax agreement today, so I would rather you to go back to the recorded lecture and listen to the lecture first before we go into any question. Yeah, because again, double tax agreement is a theoretical question. Of course, there will be in your final exam. All right, because we have just submitted the final exam question yesterday. All right, for vetting, etc. Okay. Question on this? Are you okay to watch the video? Right, so when watching the video, you can just pause, and if you don't understand or if you feel boring, you can just fast forward, right? Or so you are very creative in that. Yeah. So again, this topic will be in your final exam. Okay. What I want to look now is on the is on the course outline again, because I always want to make sure that we are on the track. All right. So your withholding tax and double tax agreement. Okay. So this is the one that we have covered today. All right. RPGT. All right. I want you to also refer back to your RPGT video. All right. In my, where is it? Where do I look for my video? All right. So in or maybe I just give you, I have it here, right? Where is my recorded lecture? Oh, what is this? 3142 all section. Recorded lecture kat bawah. Right. So we already have here RPGT. Right. So please refer back to RPGT if you're not sure. Because I want to do, have you done the tutorial question? All right, because we also have the tutorial question here. But if you want to do the tutorial question with me, I'm also okay. But I will not record again because I already have the recorded version of my tutorial on RPGT. So I'm not sure whether I should repeat again. Excuse me, all this while, can you hear me or not?
Yes, madam.
Yes,
Yes, madam.
I punya mute je tadi. Okay, Where was I?
Tutorial.
Okay, tutorial on RPGT. Thank you. All right. Coming back. Alright, tutorial RPGT, mana Chrome tadi? Alright, tell me how do you how do you feel if you have to refer to the recorded lecture? Is that okay for you or you don't like it? Hmm?
What was your question, madam?
When I ask you to watch my recorded lecture in the Google Classroom, is that okay for you?
Yes, it is very good.
Yeah, no problem. Yeah. So I have asked you to refer to the double test agreement lecture, and because RPGT we have left the topic long time ago, but it's also in your final exam. So I want you to go back to RPGT topic. And if you think that you want to do tutorial again, I'm not sure whether we have done the tutorial or not. Can someone check on whether we have done the tutorial on RPGT or not? Can you check your notes? Or you don't have notes with you? How is that? Right? I do not know whether I have done the tutorial on RPGT. If you have the tutorial questions on RPGT, all right? Then tutorial question RPGT. Yes, we do have that. All right. We do have question number 1, Miss Liza. And then question number 2, Encik Ahmad. And then question number 3 is Mr. John O. All right. So I want you to do all these questions, all right, because all this is actually in the tutorial, in the recorded tutorial, but I want you to do that first before you watch my video, all right? Okay. All right. Well, okay. So that's on RPGT. What else? Okay. Okay, because I have just confirmed, I have just submitted the final exam question. All right, your midterm test would be on the, what is your midterm test?
17th of July.
17th of July, which is, okay, the coverage for your midterm exam, I have done that. Okay, all right, that's why I say it's going to be 3 hours instead of 2 hours. Why? Because the topic is partnership. It is your midterm exam. Okay, can you write it down? Topic is partnership, capital allowance, where you have plant and machinery and industrial building allowance, plus another question on agricultural allowance. Yeah, so and then you have the self-assessment for company. So this 1, 2, 3, 4, 5 topics will be in your midterm exam. Your final exam, you will have your corporate tax, all right, means that top question where you have given corporate profit and loss account, and then profit and loss account, then you have to compute the chargeable income with all the income and expenses. Do the adjustment. Midterm, investment incentive will also be there. All right, it's either your pioneer status, investment tax allowance. It could also be reinvestment allowance. All right, even though I have not covered reinvestment allowance, but I've told you that the computation is similar to ITA, investment tax allowance, whereby whatever capex incurred, the qualifying capex is given as a deduction, 60% of your capex against 70% of your SI. All right, so that is your reinvestment allowance, but the criteria for reinvestment allowance is different from pioneer and investment from your ITA. Yeah, so go through what is the criteria for you to fulfill in order for you to apply reinvestment allowance. Computation is similar to ITA. Withholding tax and double tax will also be in your final exam. RPGT will be in your final exam, and your indirect taxes will also be in your final exam. Indirect taxes. Yeah, yes. Right. Okay, question on the midterm and final exam? So, all right. Because you're going to watch the double tax agreement video, I just would like to go through that. The topic here is actually a summary of your double tax agreement. Is that when you have all right, business in Malaysia, all right, and then you want to have another business outside Malaysia, all right, so we're talking about international business, right? So that's why sometimes the topic is not only called double tax agreement, we call it also that as a cross-border activities. It means that when you have activity outside Malaysia, or if you want to look at it, is that if you have an investment from outside and to put a business in Malaysia, all right. So when you have that kind of businesses, all right, you have to understand that, let's see, as a Malaysian taxpayer, right, you're a Malaysian resident company, right, you have to pay tax on a territorial basis. It means that income derived in Malaysia, you are going to pay that in Malaysia. And another income, which is, for example, foreign income, right? Remember that foreign income is exempted. So whenever you have business income from outside, whenever you have dividend income, interest income from outside Malaysia, the income is exempted from YA 2004. Is that clear? Right. But talking about other special industry where we call this BISA, banking, insurance, shipping, and airline. So these four types of industry, all right, if the company is a Malaysia resident company, whenever the scope of chargeable is that wherever income is derived, we call it as a world scope basis. So whenever the income is derived, whether it's in Malaysia or outside Malaysia, if the company is a Malaysia resident company, then whatever income is derived will be taxed in Malaysia. All right, so you now understand that. For example, let's say that I have a banking company. All right, I have bank in Malaysia. I also have bank in Taiwan, for example. Yeah, Taiwan. So because it's a banking, we fall under specialized industry, BISA, all right, banking, insurance, shipping, and airline. Can you remember that? Yeah. So these four industry, wherever income is derived, will be taxed in Malaysia. So it means that you have to pay tax even though the income is actually derived outside Malaysia. So what happened here is that in Malaysia, you have to pay tax. All right, pay tax for income in Malaysia and also income in Taiwan. Why? Because in this case, because it's a worldwide scope, right? But at the same time, because you have business in Taiwan, you also have to pay tax in Taiwan to Taiwan government. Do you get that? So in this case, on the same business income, in this case, banking income, in Taiwan, you have to pay, the taxpayer has to pay tax to Taiwan and tax to Malaysia. Why? Because the banking is actually under world scope basis. So on this, you have to understand that on the same banking income, the company has to pay double tax. Tax on the same income, you have to pay tax to Taiwan and tax to Malaysia. So that's what we call double taxation. All right. So double tax, so it means that you are paying tax, two taxes on the same income. Do you get that? All right. So of course this is not of course if you have to pay two taxes for the same income, of course not everyone is happy. So what we do is that in order to encourage international trade, for example, in order to facilitate world trade, all these things lah, yeah, to promote technology transfer, for example. So governments, all right, countries will have an agreement. All right, Malaysia and Taiwan, for example, will come up with an agreement to how to reduce the burden of the taxpayer. All right, in this case, we are talking about this Malaysian here. All right, taxpayer, when you have business in Taiwan, is there any way that you can reduce your tax liability? Or in other words, you can reduce your tax burden. All right, so for that, we come up with what we call double tax agreement. All right, agreement between countries on how to reduce the tax burden of a taxpayer. All right. So in Malaysia, for example, currently we have 76 treaty arrangement. Right, we have Malaysia with Taiwan, Malaysia with China, Malaysia with Hong Kong, Malaysia with Indonesia, Malaysia and Singapore. So total 76 treaty. So one treaty is one Malaysia and other country. All right. So we had this agreement in order to say, okay, if there is a case whereby, for example, Malaysia and Taiwan, income on the business, how can we reduce the tax liability of this person? All right. So then come the tax relief, the tax method lah. All right. We call it as a double tax relief. How can we reduce the tax liability? So that's why we come up with the exemption, tax credit, and tax deduction. So this is why here. Okay. We have tax deduction, we have exemption, and then we have tax credit. Yeah. So for the following, all right, I want you to refer to my video on double tax agreement. All right. I hope that you can understand. It's the same. All right. It's the same person talking on the same topic. All right. At different time. Okay. So that is another, then you have to understand how each method, all right, the double tax relief, all right, this is what we call double tax relief mechanism, all right, how it works and how it helps the taxpayer to reduce their tax liability. So they give you a very clear example on this. Okay. And then we go on with the term, what we call permanent establishment, all right. Permanent establishment, so we have a very long topic under permanent establishment where we talk about where is PE, right? The central issue when talk about cross-border transaction is which country has the right to tax on the gain or profit earned therefrom. Yeah. In the double tax agreement between Malaysia and treaty countries, the PE concept is employed to resolve the issue. So now we are talking about business income. Yeah. When a foreign enterprise is carrying on the business, we're talking about business income here, all right, through a PE in Malaysia. So it means that if you have, for example, you have a Japanese, all right, having a business in Malaysia, so you want to see whether that Japanese company has a permanent establishment in Malaysia or otherwise. Right? How do you know whether that person has a permanent establishment or PE? Then you have to look at the what we call that the definition of permanent establishment. Yeah. So it says that if you have PE in Malaysia, then the Japanese company must pay tax in Malaysia on the income derived in Malaysia. But if the business, the Japanese company, all right, have a business in Malaysia, but does not have PE in Malaysia, right? You have business, but you don't have any permanent establishment in Malaysia, then that Japanese company are not subject to tax in Malaysia. Yeah. So how do you know whether you have a PE or not? So they give you some of it, for example, a fixed place of business. Yeah. So if you have a fixed, you have an office, for example, right, the business is wholly or partly carried on. So it includes, for example, a place of management, a branch, office, factory, a workshop, all right, all these a building site or construction that exists for more than 6 months, all right, a farm or plantation. So if you have any of these, all right, means that if you are a foreign company having a business in Malaysia with any of these, maybe you can have an office, or you may have a factory in Malaysia, or you may have a farm or plantation in Malaysia, then it shows that you have a permanent establishment in Malaysia. When you have PE in Malaysia, means that you have to pay tax on the income derived from the business in Malaysia to Malaysian government. Do you get that? All right. So when you have PE, we say that you have trade in Malaysia. But if you don't have any PE, for example, you can have a business transaction, but you don't have any permanent establishment, then we say that you don't trade in Malaysia, but you trade with Malaysia. All right, there's a difference between trade in and trade with, right? Of course, there is a additional definition. All right, let's look at this example. All right, where we say that Disneyland Incorporation is a manufacturing company in New York. All right, United States. Okay, it's a United States, so it's a non-resident company. All right, the Disney Inc., when you see Inc. here means that the company is a non-Malaysian company. It manufactures Mickey Cat t-shirt. The cost of t-shirt is 30 ringgit Malaysia, while the selling price in US is 45 ringgit. Both are translated from the USD. In 2019, the company sold Mickey Cat t-shirt to Ahquai, an independent agent in Malaysia, for 35 ringgit per t-shirt. Right, the gross income 17,500, which is the 35,000 35 ringgit times by 500. So total income 17,500 would not have any Malaysian income tax exposure because Disneyland does not have any PE in Malaysia. All right, why is it here? You have this company in US and this company in Malaysia. So what happened is that, all right, the Malaysian company order from the US and the US send the order. All right. So they fulfill just from there. So it means that the US company don't have any factory, they don't have any branch, they don't have any office in Malaysia in order for them to sell the t-shirt. All right, it's just that you can just order online and then settle. All right, in this case, so in this case, even though US have income from Malaysia, they don't have to pay tax in Malaysia. Even though the US have in this case, Disneyland Inc. have a business with Malaysia, all right, but they don't have business in Malaysia. So because of that, they don't have to pay tax in Malaysia. There's no tax exposure in Malaysia. All right. So I have this discussion as well. Okay. So lease rental on ships. All right. Remember that Section 4, remember when you do your withholding tax, Section 4 Big A, number 3 are the lease of movable property or rental of movable property. So in this case, it fall under, for example, if you have any boat, any ship, all right, any cargo that you rented out, all right. So then you have to look at whether is there a business in Malaysia or not. So remember that when you talk about the Section 4BA is income to a non-resident person, right? The withholding tax is whenever you have income paid to a non-resident person, whether subject to income tax, subject to withholding tax or not, all right? So why is this that in this example, Disneyland ni, all right, can you tell me why is that in the case of Disneyland Incorporation, the question is Disneyland Inc. in this case is subject to withholding tax? Disneyland is a non-resident person. Payment of 17,500 to Disneyland Incorporation, is it subject to tax or not? Is it subject to withholding tax or not? Anyone? What about Zahid? Okay, Hannah think not yet. Okay, why? Why do you think that? Okay, if you say that's not subject to withholding tax, why? If your answer is yes, I also want to know why. Want to go back to here? Let's see again. Do you understand my question? Right? Why? My question is withholding Disneyland Inc. subject to withholding tax? Yes or no?
No kot.
Yes and why, no and why. Okay, when you want to check whether subject withholding tax or not, what you have to check first? Remember just now, non-resident person. Recipient is a non-resident person. Madam not sure. Very safe answer Okay. Yes, in Disneyland Incorporation is a non-resident person. Number 2 is the income subject to the scope. Alright, is it any fund that is it a royalty? Is it an interest? Is it a public entertainer? Is it what else? Interest dah. Contract payment? Is it, how many do you have? Section 4 Big A. Alright, so does it fall into any of those? To Disneyland Inc. What kind of income is this? Come on, text 2. Okay, you tak nak jawab? I don't want to talk about it. Okay, let's go. Okay, this one talk about the issue of withholding tax. So because you may find that the double tax agreement and withholding tax is all related, because withholding tax is payment to non-resident person. All right. So if you have the income subject to the withholding tax and you are a non-resident person, then you have to pay withholding tax. All right. But if you talk about permanent establishment, it's a business income. So it's a different issue. All right, and then gross payment. Okay, all right, so, okay, that's on double tax agreement. Please refer again to my video on the double tax agreement, right, for detailed discussion on this topic. What else? Okay, so now it's 3 o'clock. So I want you to have, I'm giving you time to actually, I can actually leave the session. All right, if you have any question, I will still be here. I'm still here, all right, but I want you to go back and look into the lecture on double tax agreement. If you have any question, you can always ask me, right? And I also want you to go back and ponder the question that I asked you about whether withholding tax is subject to this example 51.4. So I think with that, right, if I don't get response from student, I don't have the energy to talk about, yeah. So rather than talking to myself, right, I think that I would rather end the class now. Inshallah, I'll see you again next time with that. Assalamualaikum warahmatullahi wabarakatuh. Unless you have question. Okay. All right. Again, all right. Just now we were in the double tax agreement. All right. Double tax agreement means that you have income, business income outside Malaysia. So remember that income outside Malaysia under BISA is still subject to Malaysian tax because income is charged on the wherever income is derived. All right. BISA. So when talk about BISA, all right, then you have to see whether there's an agreement between Malaysia and the other country. Why we have an agreement? We try to reduce the tax burden of the taxpayer. Number one is right through the mechanism. And then under double tax agreement also, we do have, for example, if the person is subject to withholding tax. All right, we're talking about other than business income. All right. So it means that if you're making, you have to make payment to a non-resident person where you have to withhold tax, then maybe, for example, under double tax agreement, for example, interest is 15%. All right. But now because it's a double tax agreement between Malaysia and, for example, Indonesia, right? then we say that, oh, royalty payment made to an Indonesian or resident person, instead of 10% royalty, you only have to pay 8% or 6%. So it depends on the agreement. All right, the agreement between one country to another is different. So whenever you want to have business in another country, number one, you also have to check whether Malaysia has a double tax agreement with that other country. All right, because why? You want to see how will be your tax exposure, all right, and how can you reduce your tax burden in the case of, for example, if you were to pay to a non-resident person of that country, right? So initially, if you have to withhold 10%, maybe you just have to withhold 8% or maybe 5%. It depends, yeah, on the agreement. So what else? Yeah, so that is on, because this topic, withholding tax and double tax agreement, I would say is interchangeably. All right, it's not interchange. Because sometimes it's overlaps. All right, so you have to look again at the scenario and to decide whether first is withholding tax subject or not. If not, then it's a business income, and then how can you actually reduce the tax liability? Then you have to check whether is it a permanent establishment, everything, yeah. So all these things, yeah. Okay. Yeah. I say I want to stop this now, right? Other question? No question? If no question, then I can